Again, welcome back to another edition of the Forex Weekly Forecast. And if you are new to this series, what we are doing here, we are looking for some good opportunities that may happen or not may happen next week. And also we have some kind of education here, so you walk away with a little bit of knowledge after you finish watching this video. And the topic of today's discussion is reading the chart. Last time we discussed trend identification techniques, and today we will sum up all the techniques that I taught you in my previous videos, and we will try to read the charts. And okay, let me have some empty space to show you what I mean. From our previous lessons we know the kinds of swings, and those relations between these swings form trends. These trends usually consists of highs, higher high, low, lower low if it is an uptrend, and low and lower low, lower low and lower low, lower high and lower high for a downtrend. And between them, to my own identification, I don't know what your rule says, we should have a corrective swing only, and here we should have a corrective swing only. So for me, if this swing is long enough to test the border between the highest high and highest close of this previous swing, it would be called a retest swing, and it is not a trend for me. Although we may have this high a bit lower than the previous high. My rule is very strict, it says we need to have a corrective swing. In this case also, this correction should not be that very big to touch the zone between the lowest low and lowest close of this previous impulse or retest swing high, or sorry, low. So that's it. Impulse or retest swing first, corrective swing the second, and impulse swing only is the third. This is the pattern of a trend. And the next thing to the downside is also the same thing. Impulse or retest swing first, corrective swing second, and only impulse swing is the third. What is impulse swing? It is a swing that has a lower low, lower close beyond the previous low, or a high high, higher close beyond the previous high. It should have a close. If it doesn't have a close, it would be a retest swing. Okay, so this is the pattern of the swings that we know from our the pattern of a trend, sorry, that we know from our previous lessons. Okay, let me delete them, and now we will draw the situations that may appear in the chart, and I have three situations that I look at, and they are like, I don't know, like some letters that I combine and use them as words to interact with the market. Okay, the situation number one is we have a trend, we have a corrective swing, and the second impulse. So okay, this is an uptrend. So the probability here says that we most likely will have that corrective swing and continuation. So this is the situation. If we have this trend, most likely we will have that corrective swing and continuation, corrective swing and continuation, and on and on and on, because the trend is the tendency of price to move in one direction. This is number one, ladder number one, how to read price action. If you see this formation, it means that it will most likely go in this manner. Okay, what if we have this one? If we have this one, of course it definitely breaks the structure of high highs, high lows, because we have a lower low here. It is called a breakout at the downside, breakout. It may be a retest, maybe an impulse swing, so it doesn't matter. In this situation we should do nothing, we should wait for uh, as I call it, confirmation sign. For me, what would be a confirmation sign? Either we go back to a previous trend direction, resume the previous trend, and then in this situation, this movement to the downside is now will be called a false breakout, because we had a breakout to the opposite direction. It will be called a false breakout. Or another confirmation for me will be this price action. So I will have a correction and I will have a further continuation of a trend. So in this case, a downtrend started because we have a retest impulse or sorry, retest swing or impulse swing, then we had a correction and then impulse swing only. That is a confirmation. This part is a confirmation of price to move to the downside. And when we had that continuation, so it means that this part was a confirmation that denied the previous breakout to the downside. So we are waiting for confirmation sign. This is the first sign, and this is the confirmation sign, like this. Understand what I mean? So the first breakout is nothing yet. It may be very well be a false breakout. Okay, and also we may face that situation that is also very frequent here. We may have a corrective swing and then we may have a retest swing. So thus we are forming a double top formation. What is retest swing? You know that it is a swing that is deep enough to touch the zone between the highest close and highest high, but it never closes above this zone. We may have a wick that extended beyond this zone, but we shouldn't have any close above that. So if we have a double top by itself, this swing is very short. We fail to install the next impulse. We failed it, but by itself it says nothing. What we need a confirmation sign. This is the first sign, number one, and the confirmation sign will be like this. If you have close below previous low. So now we know that most likely, maybe 55 to 60% probability, the downtrend will start. So we most likely will see it this way, either than this one to the upside. So these are the 1, 2, 3 examples of reading the price action. Okay, what other kinds of price action we may face? Okay, for example, we have this retest. You know what is retest? Yes, it is the price action that is deep enough to touch the highest the zone between the highest close and the highest low. Okay, and then we had a corrective swing and another retest, and then we have a corrective swing that is a bit less than previous swing, and another retest, and then we had it a bit less than previous swing and another retest. Usually we have it 1 to 3 attempts, and the attempt number 4 is usually a violation. The first time we have a close above this 1, 2, 3 triple top is a confirmation of price action to move to continue uptrend. Okay, what is the next kind of price action? So when you use my trend identification techniques, my swing identification techniques, what other formation will tell you what are the probabilities. Okay, for example, we have it this way. This impulse is relatively smaller than the previous impulse, and then we have a correction that is relatively smaller than the previous correction. Then we have a retest that is relatively smaller than the previous retest, and then we have a correction that is relatively smaller than the previous correction. and so on and so forth. In this case, we usually tend to move to the downside. If I drop some trend lines here, you will see the formation that is called wedged formation. So these sloping lines moving towards each other, and they are pointing in one direction. They are pointing to the upside, and we have an upside trend. That indicates that most likely we will move in opposite direction after we break that level, this one. It is, for me, would be a confirmation sign. Other traders trade these levels, breaking the trend line plus this highest level. For me it's not enough. For me enough is the breaking of the whole structure. It means the breaking the lowest point of this formation. This is called the wedge formation. Okay, let me drop another situations when you will have some kind of an edge over the market. If you will repeat consistently doing it the same and the same and the same. Okay, in this case we may face these we can have it this way. Maybe we have a violation or a retest to this, then we have a correction that is relatively smaller than the previous correction, and then we have a retest or violation that is relatively smaller than the previous retest, and then we have a correction a bit less than previous one, then a retest that a bit less than previous one, then a correction that is a bit less, then a retest that is a bit less. So in this case we have the situation moving this way, like this and like that. So before that we had an uptrend. Let me draw some other impulses, something like that. So we had an uptrend, and then we have the same wedge as we had to the upside, but it is pointing the opposite direction to this trend, and this is the trend continuation sign. Most likely it will continue to the upside. The first wedge was a trend reversal sign. The second wedge is trend continuation sign. Okay, so whether what you can either wait until it breaks the whole structure, or you can be more aggressive and at the first breakout of the trend line enter this formation. It is up to you what your rules said. Okay, so what other formations we can see? Multiple triangles, multiple flags, multiple channels. Okay, we can easily see them in the market. What is triangle? When we have this correction, then we have that a bit less. It's not a retest, not an impulse, nothing else. Correction, correction, and correction. So triangles usually a kind of complex correction. Yeah, you shouldn't pay attention to this until we break that, violate that stuff. If you watch my previous videos, I usually ignore this movement of this correction. I usually do not draw any swings here. I usually draw it like that, and these are deleted. So these are triangles. They mean almost nothing. It is simply a correction. That is compound correction that consists of several movements, not a straight. I only show it with a single line because it is simpler, for the matter of simplification, but you can know that we may have several movements here. Okay, what are other formation? They are again some corrections, corrections, and these corrections can be of this structure, just between some lines, moving, and then we shouldn't violate this low. Maybe we can have some retest here, but we shouldn't violate that and go to the downside, to the upside, sorry. So this formation is called descending channel, or it is called a flag, or whatever you want to call it, whatever it looks like for you. Maybe you will call it dinosaur mouth, something something like that. Or you may take some pattern and draw a pattern, and you'll call it a godly pattern, like this, and you say, okay, let me buy it here. It doesn't really matter. So these are the basics of price action reading, depending of what relationships between the swings we have, how swings are situated relatively to one compared to another. So okay, let's go to our charts and let us analyze it. What we have on this chart, I don't see what the previous history was here, but here we have this corrective swing and that continuation swing. Maybe it lasted from some highs, but it doesn't really matter. We have this be a corrective swing, and this is a swing to the downside. And after that we had a continuation. I ignore this movement because we do not have a zigzagging pattern here. So we do not have a swing started to the downside. The first swing started to the downside is here. If you want to know how to identify swings using those zigzagging patterns, you should go and watch my video that is called Swing Identification Technique. Okay, after that we had a violation, and then we had a retest. You see, it is touching the previous zone between the close and the low. Then we had a violation again, and then we had a retest, and in this case you see it was a false breakout because we had a continuation to the upside. Okay, why do I ignore this movement? Because this movement is relatively too small if compared with previous corrective swings. So this is a very small correction. I only look at the bigger corrections like this and this. What we had next? We had next another violation to the downside, and again no downtrend started yet. If you do not have a second confirmation, so no downtrend is here. So what we have here? We have then a violation to the upside. Technically speaking, the uptrend continues, and after that we have a very good corrective swing to the downside, and then we have a retest swing to the upside. So this formation tells me that we have a double top. This second impulse swing, sorry, is not an impulse, is a retest impulse. We failed to install a high close above the previous swing. So that means that we have the first sign of reversal. What we need? We need a confirmation sign, and this confirmation sign is that breakout to the downside. Okay, let's move further. What we have? We have this deep corrective swing, and as I told you, we have one sign and the confirmation sign. We tend to continue the downtrend. Downtrend continued. We had a close below previous impulse low. Let me move it a bit further. And right now we stay within this previous impulse range. Let me mark it for you. Within this last impulse range, we have a downtrend installed because we had an impulse, retest, then we had a correction, and then we had another impulse, and we have a close beyond the previous impulse. So taking this second impulse is a very good idea to look for some advanced formation, and for me this advanced formation is called the Gatling. If we draw our fibs and enable only those that are needed, they are 618, no, 382, 786, okay. So for me, XA should be the impulse leg of a trend, and the trend should be installed. The B point should at least touch 382, and we see it touching 382, but it should never touch 786. So we don't see this touching 786. If this criteria is met, we look for measuring this leg. Measure this leg. It should be the same. Let me show it to you. Like this. Okay. The minimum requirement of this leg, B to C, sorry, A to B to C, yes. B to C leg should be at least 382, and it should not exceed A point. So we have one side, second side, side number 3, and side number 4 will be that 786 to end the short here. So if we have this formation going to the upside to a completion, if this formation completes, then I will enter that. And as usual, let us calculate some risk to reward, some properties of this trade. I'm looking for extended targets. If I enter at 786, I'm looking for this downtrend to continue like this to 127 extension at least. So starting from here, let me delete this rectangle. What is it? I deleted some fibs. Okay, it doesn't matter. If price goes up to this 786, then the order will be triggered, and I'm looking for a price to go to the downside, all the way downside, until we hit this 127 extension. Okay, you should note that placing this position analyzer, placing these targets, placing these stops on the chart does not mean that I already entered this trade. It is the silliest thing anybody can think of, that I already entered this. I'm telling you that I'm waiting for this price to 786 to completion of this Gatling. I will never enter it if it is not completed. If price will never go there, I will never enter it. Even 1 pip. If it didn't hit my order, even 1 pip, I will never enter it. My rules are very strict. Okay, so this is the opportunity that I'm looking for this week. Waiting for this price, entering here, and then waiting for it to continue the downtrend. Okay guys, that's it for today. Hope you enjoyed that. Subscribe to my YouTube channel. Give me likes if you find the information useful. Follow me on TradingView. Post your comments, share your views also, and hope to see you next week then. Goodbye.